Welcome. In this video, will Zbcn coin go ATH again? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the chart, one of the most notable technical elements is the analysis conducted using Fibonacci retracement levels, a widely used and trusted tool in technical analysis. Particularly when measured from the bottom to the top of the price movement using the Fibonacci tool, we clearly observe that the price has retraced to the 0,382 level and has started to bounce upward from there. This development is considered a positive signal, not only from a technical analysis perspective, but also in terms of investor psychology. The 0,382 Fibonacci level is a significant support zone, where the market often completes its short-term correction and begins to gather strength again. The fact that this level held and the price began an upward move from there is considered a reversal signal in technical terms. Fibonacci levels help identify potential support and resistance points based on historical price movements. The 0,382 and 0,618 levels play a major role in investors' decision-making processes. These are not just mathematical ratios, but also psychological thresholds that reflect collective market behavior. Currently, the price reaching the 0,382 level and reacting positively shows that market participants are taking this level seriously and viewing it as a buying opportunity. A reaction from the 0,382 level not only validates the current price action, but also indicates that the larger trend is continuing in a healthy manner. No uptrend moves in a straight line. Every upward trend includes periodic pullbacks and consolidation phases. The 0,382 Fibonacci level becomes relevant precisely at these times. It is often referred to as a healthy correction and serves as an ideal support zone for the market to pause and then resume its upward movement. The fact that the price is beginning to move up from this level may signal a stronger and more accelerated rise in the near future. Additionally, finding support at the 0,382 level is an encouraging sign for buyers. It suggests that strong hands are stepping in and viewing this level as a buying zone. Institutional investors and professional traders frequently base their positions on Fibonacci retracements, and levels like 0,382 are considered low-risk entry points. In this context, support at this level is significant not only for technical analysis, but also in terms of restoring investor confidence. If this level holds, and the price continues its upward movement, the next targets will be the 0,236 level, and eventually the previous highs. The price beginning to rise from this point may also mark the start of a broader shift in market structure. In technical analysis, Fibonacci levels are not only seen as support and resistance, but also as indicators that help redefine the direction of a trend. A bounce from the 0,382 level indicates that the uptrend remains intact and that the market has simply gone through a short-term correction to gather momentum. A rally starting from this point is typically strong and sustainable. If an increase in trading volume is observed during this rally, it further reinforces investors' confidence in this level and the market's bullish outlook. The 0,382 Fibonacci level is often seen in technical analysis as a precursor to golden ratios. But we can't rely solely on Fibonacci for analysis. Let's also look at other metrics. Stay tuned. When we look at the chart, it is clearly visible that the highest point of the current price action aligns precisely with the red resistance line I have drawn. This zone stands out as a highly critical level where the price previously struggled to advance, faced strong selling pressure, saw investors engaging in profit-taking, and consequently experienced a temporary weakening of upward momentum. However, upon analyzing current price behavior and overall market psychology, we are receiving strong signals that this level may now be weakening as a resistance. In particular, recent candlestick formations, the increase in trading volume, and the positive signals from technical indicators suggest that if this level is broken, the price could continue its upward move with strong momentum. If the price manages to break through this critical resistance level, symbolized by the red line, it would signify not only a technical breakout, but also the emergence of a new wave of confidence in the market. Such a breakout would indicate that buyers have taken control, uncertainty in the market has dissipated, and the uptrend has received strong confirmation. Especially if the price not only tests this resistance level, but also maintains a position above it, making daily closes above the line, it would symbolize the beginning of the next upward wave. This could imply the formation of a new uptrend that may carry the price toward much higher target levels. For investors, surpassing this resistance line may lead to the opening of new long positions by those who recognize the long-anticipated breakout, resulting in an influx of fresh capital into the market. This could trigger a price movement strong enough to require a redefinition of both short and medium-term targets. These kinds of breakouts typically represent not only technical barriers being breached, but also psychological ones, showing that investors who were previously cautious are now acting with greater confidence. Once this level is breached, we may witness the classic resistance turning into support scenario in technical analysis. In other words, this level, which previously could not be passed, may now serve as a strong support in the event of a pullback. This contributes to a healthier and more sustainable uptrend. Moreover, such strong breakouts often serve as signals for algorithmic trading systems, attracting both retail and institutional investors and increasing overall trading volume. If this scenario unfolds, where the price maintains a solid and determined stance above the red line we've drawn, it would not only strengthen the current trend, but could also signal a transition into a higher price structure, targeting previously untested regions and potentially challenging all-time highs again. To summarize, if the price breaks above the red resistance line we have drawn, this would be considered a positive breakout in technical terms, and would make the overall market outlook significantly more optimistic. Surpassing this level could be interpreted not just as a short-term rally, but as the first sign of a major trend reversal, or even the beginning of a new bull market. Therefore, it is of critical importance to closely monitor this zone and observe how the price reacts to this level in order to develop sound trading strategies. When we look at the vortex indicator, it's clear that we are faced with a rather striking setup. In the current outlook, we can clearly observe that the red line, representing the negative vortex, is gradually climbing upward and approaching the positive blue line. This convergence, especially when compared to similar past chart patterns, may signal the possibility of short-term market volatility or a period of consolidation. More importantly, in a previous similar scenario, when the red line was about to cross above the blue line suddenly gained strength and moved upward again, providing one of the key signals that preceded a strong bullish move. It wouldn't be wrong to say that a similar scenario could potentially be developing now as well. The narrowing gap between the red and blue lines may be an indicator of short-term indecision or a consolidation phase in the market. However, if this narrowing does not turn into sustained negative pressure, and instead results in the blue line regaining strength and continuing its upward movement, this would paint a very positive picture for investors. Especially in the vortex indicator, such false crossover attempts can indicate that the market is in a preparatory phase and gathering momentum before determining its next direction. Therefore, as in the past, if the blue line manages to bounce upward at the last moment, it would show that the buying pressure in the market is still strong and that the upward trend may continue. This suggests that investors still have confidence in the market, buying activity remains dominant, and the bulls are not ready to give up control. One of the most important factors to consider when interpreting the vortex indicator is that these crossovers often provide signals ahead of actual price movements. The vortex shows us trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.